Good morning, traders. I appreciate you taking the time to join this discussion. What we'll be exploring is a topic that has become increasingly important in the world of Forex trading. That is the rise of cryptocurrency and how stable coins are finding their place within Forex markets. As always, my aim is to guide you through these developments in a way that feels clear, natural, and rooted in real-world trading experience. The world of Forex trading is no stranger to innovation. And one of the most profound shifts in recent years has been the rise of cryptocurrency and the growing integration of stablecoins into Forex markets. As traditional fiat currencies continue to experience fluctuations driven by political, economic, and social forces, digital assets have emerged not merely as speculative instruments but as functional participants in the broader financial ecosystem. A seasoned trader would recognize that while Forex has long been dominated by central bank policies and macroeconomic indicators, the appearance of decentralized assets is steadily changing the landscape. Cryptocurrency, initially viewed as a fringe concept, has matured dramatically since the early days of Bitcoin's introduction in 2009. It has captured the imagination of investors seeking new opportunities outside the conventional banking system. Bitcoin, Ethereum, and a host of altcoins have proven that decentralized finance has both staying power and the potential for substantial market influence. Traders who once scoffed at crypto as a passing trend are now seeing it reshaping liquidity flows, volatility patterns, and even trading psychology. Forex, long seen as the domain of major government currencies, now faces a new class of assets that operates by different rules. It is important to understand that cryptocurrencies, while promising, bring with them unique challenges that do not typically arise in traditional Forex. Extreme volatility, for instance, has made Bitcoin a poor candidate for stable cross-border transactions. Even a seasoned Forex trader would find it difficult to price risk effectively in a market where a currency can swing 10% in a single day. For this reason, the industry saw the birth of stablecoins, which serve as a bridge between the chaotic energy of cryptocurrencies and the relative predictability of fiat currencies. Stablecoins are digital assets that are typically pegged to a stable reserve such as the US dollar, euro, or even commodities like gold. Coins such as Tether, USD Coin, and DAI have gained significant traction because they offer the technological advantages of crypto without the dizzying price swings. A stablecoin's primary appeal to a Forex trader lies in its capacity to facilitate fast, low-cost transactions while maintaining a predictable value. This predictability makes stablecoins an ideal instrument for traders seeking to hedge against volatility or to move funds across different platforms without the usual fees and delays. In recent years, Forex brokers and trading platforms have begun to integrate stablecoin-based accounts and deposit options. Traders are increasingly given the choice to hold account balances in UST or USDC rather than traditional currencies. This development is significant because it signals a blending of two once separate worlds: the old structure of centralized monetary policy and the emerging frontier of decentralized finance. A trader opening an account today might find that funding it with a stable coin is faster, cheaper, and more convenient than using a traditional bank wire. Liquidity, which is always a crucial concern in Forex trading, also receives a boost from cryptocurrency and stablecoin integration. Because cryptocurrencies operate 24/7 and across borders without the limitations of banking hours or public holidays, liquidity provision becomes more dynamic. This can result in tighter spreads, quicker execution, and new arbitrage opportunities for those sharp enough to spot them. Forex markets, which have traditionally operated 5 days a week, now face the reality of a digital asset class that never sleeps, forcing brokers and liquidity providers to rethink how they approach uptime and availability. Moreover, the rise of cryptocurrency has ushered in a new generation of traders who are more comfortable with digital wallets, blockchain technology, and decentralized applications. This younger demographic often expects seamless, fast, and transparent services. Forex brokers, seeking to stay competitive, have been compelled to adapt by offering crypto-friendly services. Those who fail to do so risk becoming obsolete, as new players who embrace the technology will likely dominate market share in the coming years. Of course, no discussion of cryptocurrency and stablecoin integration would be complete without touching on regulation. Governments and financial authorities around the world are increasingly aware of the growing influence of digital assets. Some have taken proactive steps to regulate stablecoins as they would any other form of payment service, requiring transparency, liquidity backing, and compliance with anti-money laundering laws. For Forex traders, this regulatory shift is critical because it determines the security and legitimacy of trading with or through stablecoins. Interestingly, certain central banks are exploring the creation of their own digital currencies, often referred to as central bank digital currencies. While CBDCs differ from decentralized cryptocurrencies in that they are government-issued and controlled, their development further underscores the growing influence of blockchain-based financial instruments. In a future where CBDCs coexist with traditional fiat, stablecoins, and cryptocurrencies, a Forex trader's toolbox could become significantly more diverse, opening doors to strategies and opportunities that were previously unimaginable. Yet, with every innovation comes a certain degree of risk. The integration of cryptocurrencies into Forex markets introduces new vectors for cyber threats. Hacking, scams, and vulnerabilities in digital wallets and exchanges are legitimate concerns that traders must account for. Traditional Forex trading, with its reliance on established banks and regulated brokers, offered a measure of security that decentralized finance has yet to fully replicate. Traders must educate themselves on best practices for cybersecurity, including the use of cold wallets, multi-factor authentication, and platform due diligence. It is also worth considering the impact of market sentiment in this new hybrid environment. Cryptocurrencies, more than traditional currencies, are often influenced by social media trends, celebrity endorsements, and the broader tech culture. Price movements in crypto markets can be sudden and extreme based on news or even rumors. For a Forex trader accustomed to moving based on economic indicators like GDP releases and interest rate decisions, adapting to the rapid emotional swings of crypto markets can be both a challenge and an opportunity. Looking ahead, the relationship between cryptocurrency, stable coins, and Forex trading is only expected to deepen. As blockchain technology continues to improve and as regulatory frameworks become clearer, the barriers to entry will lower, bringing in even more participants. This influx could lead to increased liquidity, innovation in trading platforms, and the development of sophisticated financial products that blend elements of both worlds. Traders who remain flexible and open to learning new technologies will likely find themselves in a strong position to capitalize on these emerging trends. At the same time, it remains essential for Forex traders to maintain a clear perspective. While the integration of cryptocurrency into Forex markets brings exciting possibilities, it does not render traditional analysis and strategies obsolete. Instead, it adds another layer of complexity and potential reward for those willing to embrace it. The fundamentals of sound trading, risk management, disciplined strategy, and continuous education remain as crucial as ever. Well, that brings us to the close of today's discussion. I will be grateful to explore more trading topics with you in the future. Thank you.